while none of us have crystal balls, as I try to look into mine, I believe now is the opportunity where investors should be moving back into precious metals if they've previously exited the market.
Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and with us today is Roy Friedman, the president of the US Mint Authorized Purchaser, MTB. Roy, thank you so much for joining us today.
My pleasure, Elijah. Nice to hear from you again.
All right. Well, I'd first like to discuss the recent price action in the precious metal markets. Now, over the last couple of weeks, we've seen gold and silver really fall dramatically. What is your perspective on, in the last couple of weeks, how we've seen precious metals fall? And really, it seems like ever since pretty much March, we've seen precious metals going mostly down. What is your perspective on this?
Well, I think the bottom line is our market is big enough and it is active enough with many participants from all corners of the financial community, big and small, that the market is not just going to travel left to right or horizontally, 24/7, day after day. So, intraday and in the short-term focus of week to week, there are always events that influence the price of precious metals. It can be an economic release. It can be a geopolitical event. It can be the perception of a change in policy from our Federal Open Market Committee with regards to interest rates, and all of these various factors, many of which I haven't touched on, but your readers, get an understanding of what I'm talking about, have an impact on gold and silver. Some of these events cause the market to run up, and other events cause the market to go down. Similarly, they have impacts on other financial products and other financial opportunities that many of your investors are probably trading at and looking at as part of their well-defined asset allocation for their financial health. But at the end of the day, the market, as I think you somewhat allude to, has been stuck in a trading range, and led by gold. Rally attempts towards 1,300 seem to peter out, and similarly, dips in the market towards and slightly below 1,250 seem to be well supported. And this rather well-defined trading range over the past couple of months, at least at the moment, as we speak today, so still seems to be somewhat in play. And I think the cause for this, to some degree, is the fact that investors, look to and try to participate in markets, that are typically moving up, where they believe, they have the greatest opportunity for a rate of return on their investment. And there is no disputing the fact that the stock market here in the United States, and to some degree, but a lesser degree, stock markets elsewhere in the world, have just simply been a better investment for those seeking, somewhat shorter term returns. And as such, we continue to see, while we continue to see plenty of new investors in precious metals, we're also seeing an unusually large amount of liquidations in the precious metals market, and one would have to conclude that those newly available investment dollars are being moved into another asset class. So I hope that answers your question.
Definitely. And if you wanted to expand on how the recent drop in precious metal prices in the last couple of weeks has really impacted the physical demand for gold and silver.
Right. Well, this historically, and I say historically because there are always exceptions to anything that one makes reference to in a historical context, but historically, precious metals, have tended to be on the quiet side during the traditional holiday summer months, at least in the Western Hemisphere. July and August, and to some degree, that sentiment seems to always hit a couple of weeks early and somehow manage to encompass June as well. And at the moment, perhaps due to what I just alluded to, but I think more to the fact that the markets are somewhat trading in a well-defined range and are trading at prices that investors have had ample opportunity to buy at, and for that matter, sell at slightly higher levels. We're now in what I would refer to a price band where the market is tired. Business that was that needed to be done in 1250 region, and business that needed to be done in the 1285 to 1300 region. That business has already been transacted, and as much of the last couple of weeks, especially, have at least 2+ weeks have been spent in the lower end of that trading range. Thus we've seen markets quiet down and physical demand quiet down as well. Similarly, we've also seen selling pressure quiet down. I think the world as we know it in the precious metals industry, will continue to at least spin, at a much faster pace, when we begin to revisit a new trading range. That may be a test on the down, further on the downside, where the great likelihood is more buyers will emerge, and it's yet to be seen if more selling will emerge. If we break higher, more towards the 1315 to 1340 band. But at the moment, unfortunately, as I say, things are just a little bit quiet, based on the lack of volatility over the last couple of days, and the fact that we've seen these prices too many times in the last couple of months.
Now, the gold-silver price ratio right now is around 75-1. What has the demand ratio that you've been seeing right now?
Well, interestingly, I have seen personally, on behalf of some of MTBs customers, both large and small, and as I continue to hear in the marketplace with, in discussions with many of my peers, there has been, quite a bit of activity with clients who are taking advantage of the historically high number on the gold-silver ratio, meaning we've seen several trades, some of them rather large in their U.S. dollar value, where customers have opted for selling gold and buying silver at a ratio of either side of 75. And that speaks directly to the gold-silver ratio. So in order to engage that type of trade, you would have had to previously own gold, and now the investor is selling the gold and converting that dollar value into silver. While the published sales figures by the US Mint are quite depressed and are a further sign of the rather slow market that we have, I think if you look at the US Mint sales of of silver products, meaning silver eagles, and compare that to the sales of gold eagles over the last 45 to 60 days, while the gold-silver ratio has been in the mid-70s, you'll recognize that the U.S. Mint distributors, of which MTB is one, as you point out, thank you, are purchasing more silver from the U.S. Mint than we're purchasing gold. So, this speaks to the fact that, investors in the marketplace are more inclined to purchase silver in the mid-16s than they are to purchase gold in the mid-1200s, shall we say. This gives further credence to those that are already in the market, selling their gold and moving into silver. These are investors who recognize there may be, a strategic opportunity to convert gold holdings into silver holdings.
Right. And when you say that you are purchasing more silver than gold from the U.S. Mint, are you saying ounce by ounce or on a dollar-to-dollar basis?
Ounce by ounce.
Oh, okay. Very interesting.
But similarly, that would, that would equate into, proportionately higher dollar, figures, for silver at the moment, given the ratio. But much of this, as I try to, explain not only to your clients listening to this interview, but to many investors who I speak with throughout my business day. At the moment, the perception from many of the people that MTB does business with, and I speak to on a personal level, believe that there is greater upside potential in silver than there is in gold. And I think, as I previously said, I think this is, reinforced by, what I'm seeing in the marketplace, which is that there have been several trades where investors, are selling the gold-silver ratio. So they obviously share that view as well.
Now, I know last time we had you on, you said that you were shocked that we weren't seeing more investors gravitating into precious metals, given all the geopolitical turmoil there was. What is your perspective today?
Well, I think the last time we spoke was probably a month or two ago, if I'm not mistaken. So I would say, that statement still holds true. And I'm just a little bit more perplexed than I was when I originally made that statement. From my desk chair, looking at not only our industry, looking at the financial community as a whole, looking at the world that we live in with all of the various geopolitical issues and threats that are lobbed from one party to another. I'm quite surprised, that we have not seen an asset class rotation that favors precious metals. I still believe we will see that this year, and if we were to wake up tomorrow, and world events, had suddenly changed, I suspect they would change in a fashion where gold and silver would be sharply higher in value. Unfortunately for me, these events are somewhat inevitable, and it's unfortunately an event that will likely take place, sooner than later, in my view. And the opportunity, I think, it is now because, as we have all seen, once these major events take place and markets start moving, it's very difficult to jump in at that point. While none of us have crystal balls, as I try to look into mine, I believe now is the opportunity where investors should be moving back into precious metals if they've previously exited the market.
Now, do you see major government mints like the Royal Canadian Mint and the US Mint keeping their production capabilities, ramped up right now and, ready for increased demand?
Well, neither the mints do not disclose, what their inventories are on the products that they sell to their distributors. This is just, not this is proprietary information that the mints keep keep to themselves. The men and women that run the various mints, the sovereign mints that we all do business with, for the most part, are professionals who have been in the market for a long time. They've seen the ebbs and flows of the precious metals industry, and they know conditions can change, very, 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 very quickly. Without knowing, how many Silver Eagles the U.S. Mint has on the shelf, or how many gold maples the Royal Canadian Mint has on the shelf, I believe at the moment they have sufficient inventory to satisfy a significant pickup in demand. So that's probably the best I can answer that question with since I don't have the basis, I don't have the statistics to answer it more definitively.
Right. And how do MTB and other authorized purchasers, really get ready for a sudden massive spike in demand for physical precious metals?
Okay. Well, I won't speak to how, the other distributors run their business, but, I'm happy to share with you, that MTB maintains a very significant inventory of the most popular traded bullion products, not only in the United States, but around the world. We are well prepared and have a significant working inventory, and always maintain a significant working inventory of the sovereign mint products produced by the major sovereign mints, the US Mint, the Royal Canadian Mint, and all of the others. And, as you've allowed me to say in the past, MTB is the exclusive North American distributor for PAMP products, as the PAMP refinery is a sister company of MTB. So we are well stocked and welcome an increase in business, hopefully very soon. We have the products on the shelf to sell all of our best clients like yourself.
All right. Well, Roy Friedman, I'm afraid we'll have to leave it with that, but thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
No, I don't have, I don't have any, special parting words. If this is the last interview that we do for another month or two, I'll take the opportunity to wish everybody a good summer holiday season. Hopefully market conditions will change, and we'll all be doing more business together in the very near future. Until then, I guess we bide our time, and like I say, have a good summer. With regards to my personal email, I think I'll leave that between you, our client, and if any of your clients have a specific question they'd like to ask me, they can relay it through you and your colleagues. You can forward it to me, and I'll be happy to respond.
All right. Sounds good. Roy Friedman, thank you once again for joining us today.
Okay. Thank you, my friend. Bye-bye now.